So, should we buy or sell CF Industries? First off, read this disclaimer carefully and do your good deed of the day by liking and commenting. Here is CF Industries' website. Our mission is to provide clean energy to feed and fuel the world sustainably. What do we do? Ammonia production, clean energy, fertilizers, and emissions control. So here is the theme: fertilizers and pesticides. Yeah, the stock is 8.8% from the 52-week low and 28% away from the highs. Here is the chart. We do see that CF Industries moves in pretty big cycles. So it can easily have a bull and the bear market within an overall global bull or bear market. It sort of has its own rhythm. That means that there are many opportunities in this stock. Yeah, it works very well in a long-short portfolio. The reason why this one popped up on my radar is that we are in this horizontal support zone. So this is a place where we do expect the bulls to do something. It could be that we are in the process of forming a very major head and shoulders pattern. If we were to form a right shoulder, that would, be a rally. So even if there is a very bearish pattern emerging, it's bullish to form the. You don't want to enter a short as a shoulder is forming. Yeah, like the first part of the shoulder in which the security goes up, obviously. Looking at the daily data points, we do have a pretty clear zone of support here. It seems like the bulls are doing something. The bears are also doing stuff, but a very stubborn consolidation pattern. And given that we recently had a pretty sizable correction in this stock, the expectation is that more bulls will find this appealing than bears. The sophisticated bears will short up around here, and they will start to cover their profits around here. This isn't really appealing to short, unless you have a clear break of the support zone, of course. But yeah, let's look at these other indicators, like that. We start with the weeklies. Yeah, we are in a place in RSI on the weeklies that has a bit of a tendency to form lows. Like back here, it formed a low. This zone also was this key low. So it's an interesting level. Looking at the daily data points, accumulation distribution is actually showing bullish divergence with price, which is, of course, bullish. Okay, so in this case, I am going to write for horizontal support in my notes. I think I will give the bulls. I give them a 5. This is bullish, but we don't have like a rally yet. We see that the bulls are preventing any more selling from the bears because as we saw in the chart, the bulls completely gave up. Not that far back, and the bears just kept pushing the stock down. But now there's this very clear consolidation pattern, which is a result of a big change in the dynamic between the bulls and the bears. So far, bulls do not have a strong edge over the bears, but if I was a bear trying to short this, I would be pretty fatigued at this point. Next, let's look at seasonality. Okay, dailies. So looking to the left here. So in green, we have the last 5 years, the last 7 years in blue, and the 10 years in red. You see that the period from early February to early March usually is a very bullish period for CF Industries. But if you look at the chart, we didn't have it in this case. That also means that there's a divergence between price and the average seasonality. You could argue that we are sort of due the strength we usually see. Based on the averages, we expect weakness into early April. But as I said, there's been a shift here in the seasonality. If you look here at 2021, February, March, April, May was very bullish. 2022, super bullish February and March. 2023 has been very mediocre so far, but that also means that we could sort of be due that strength. But March is, on average, as you can see, it is the worst month for CF Industries. On the other hand, February, if we look at the sum, it is the strongest month for the stock. April is pretty decent. Okay, usually the month is green. So in this case, the seasonality analysis becomes a bit of a messy operation because we are overdue seasonal strength. Then again, March, the current month, isn't bullish, but February usually is, so it's very convoluted. I will give the Bulls a 4 here. I would have given them a much bigger score if it hadn't been for the mess. But yes, we are due strength in CF Industries. Let's look at some of the fundamentals. So in blue here is price book ratio. It's at a key level that has attracted bulls in the recent past. Price to sales is at a very interesting support level. This usually attracts the bulls. Also, price earnings is relatively low. The yield is at 1.76%. Looking at forecasts, the average price target is 18.7% above us. A max target is 46% above, but minimum is 13% below. The analysts are overall at a buy. And here you can see some other numbers. So the fundamentals here were pretty darn interesting. So I will give the bulls a 7 on fundamentals. Okay, let's look at relative performance. Long term, we have 50% correlation with S&P 500, 93% with the agriculture ETF called with the ticker tags, 89% with the DBA, which also is an agriculture ETF. Looking at short-term correlations, -9% with S&P 500, 3% with the tags, and 32% with the DBA. So short and long term, the strongest correlation we get is with the DBA. It wasn't a super strong correlation, but generally speaking, they do affect each other. So this chart, it's messy. We've seen a big rally, but then a pullback. We are testing green 50-week moving average resistance. Resistance. This candlestick is not ideal. This is not the kind of test you want to see of a resistance level. It's not a disaster, but it's much better, for the bulls to sort of stop closer and not to give it all back. It's a bit troubling, but no reason to panic yet. This is some cause for optimism is this red 200-day moving average. Resistance here as well, but we are testing it with increasing frequency, which shows you that the bulls, they do have some ambition here. Just look here at these other indicators. Yeah, nothing super interesting. Looking at the seasonality here to the left, usually is some strength into early March. March is the weakest month when we look at the sum. That is not bullish, of course. April is relatively strong, but it's not like super green. There's been quite a few months when the bears have a win. May is very weak. So yeah, the seasonality here for the DBI is not that good. But then again, the correlation with it and CF Industries was not like super strong. So there's that. DBA. Oops. I need to do it like this. Okay. We do see the formation, the process of forming the head and shoulders here as well. If we were to form a right shoulder, that would mean a period of CF Industries outperforming the DBA, which would be bullish. For your account, it doesn't really matter how you get a bullish move, whether it is from support at a moving average, or even if a bearish pattern is forming and you are just part of the bullish section in that pattern. Here are the dailies. There's something interesting here. Looking at the seasonality, CF Industries usually outperforms DBA significantly into mid-ish March. February here, it is the strongest month for CF Industries, but this year, 2023, it was only like a 2% outperformance. March is the weakest. But here again, there could be that major shift here in the seasonality, where the usual strength we get in February, now maybe it's been pushed into March. Okay, so in my notes, I do write, when it comes to relative performance, I think I will give the bulls a 1 here. The correlation wasn't really that strong, but overall it was interesting in favor of the CF Industries, but yeah, I prefer stronger correlation in the cases where I use a bigger number, bullish or bearish. So we end up with 4.3 in favor of the bulls. We are at horizontal support. Big bull here on the fundamentals. Very, very good scores there. CF Industries, it's undervalued. It is the #1 nitrogen fertilizer out there. So yeah, it's a big player in the market. So yeah, overall, pretty bullish on CF Industries. But the bullish thesis is definitively contingent on horizontal support holding. We have some time left. Let's actually look at some of the hottest stocks. Well, let's actually look at another thing here on trading view. Let's look at the heat map stocks, and let's look at the last year performance over the last year. So a phenomenon in the market is that the previous losers can become the next winners, and the previous winners can become the next losers. So yeah, let's look here at producer manufacturing. You see here that this is Deere and Company, a massive performer over the last year, but it could also mean that the stock is very overvalued and the period of underperformance is on the horizon. Strong move here from the stock. We are high on RSI and PPO, well, some of the PPOs here on the weeklies, but not like red alert high. Also on the dailies, we are elevated, but not like super high. Seasonality here to the left is bearish. To the right, March usually is a relatively bullish month when you look at the sum, but ever since 2012, it's been rather red. April, however, is usually pretty strong, but recently it's been very volatile. It can be pretty green or very red, so the seasonality here is messy. Now let's look here at the fundamentals. 1.16% yield. Price target's pretty bullish. 12% is average price target above us. Yeah, there's some bullish activity here. Looking at price book ratio and price to sales and price earnings, relatively low. So you could make some value case here, but this is it's not like a super interesting bullish opportunity given that the stock is already up a lot. So yeah, let's look at some others. Let's look at Disney. It's one of the previous losers. It's a loser over the last year. Maybe it's at support, but the issue with the current level is that we were far lower relatively recently. March recently being a red month. That's not bullish, of course. Fundamentals are relatively low. Price to sales and price book is at support. Let's look at the price targets. The forecasts, yeah, pretty bullish. 24% above us is the average price target. So yeah, overall, CF Industries looks pretty interesting. Disney also, it's an interesting bullish opportunity, but in regards to the technicals, it is an issue that we recently were significantly lower than we currently are, which means that there's a precedence, for being further down. Which means again that the bulls that are currently holding up the stock, they might be more trigger happy, trigger upset because of that.